will be done by Mr.Jonathan Ortmans, President of Global Entrepreneurship Network from the USA. So please, welcome on stage.
Well, good afternoon, everybody. Thank you all for letting me speak in English today. I know for some of you that don't speak English, you've got those translation devices. But I speak rather quickly, so I'm going to have to try to slow myself down a little bit. Well, this is an enormously exciting time to be talking about entrepreneurship around the world. I represent a network of both policy, programs, and other activities in 170 countries. And so Stephen Chia, who represents us at GEN here, and the ministers that we've been working with here, invited me to come and join this fantastic event. And congratulations to the Ministry of Science and Technology. Great job putting this on and staying focused on startups. There's a lot of things I love to talk about when someone gives me a stage, but today they said today is all around finance. But before we get into finance, I wanted to have a chance to just take stock for a minute and think about what on earth is going on in our world. Because we have now encountered a new normal. We now have some rather interesting things going on. And the best way I figured to demonstrate this is just look back over the past few months at all of the unexpected things that have happened. The accelerated unpredictability. I've got a short video for you, courtesy of Richard Adius, who put out this great video, and I want to quickly show it to you, so we can go ahead and play it.
Space travel was just around the corner. But robots talking like humans was only science fiction.
If I was born today.
The Beatles had no future. The world would never need more than 5 computers. The 10-second barrier was impossible to break. And Titanic, unsinkable. Like the financial system. History had come to an end. Trump would never win. Brexit didn't stand a chance.
I want my country back.
South Africa would never have a black leader. North Pole would never melt. Nothing would ever grow out in the desert. Of course, gender equality would no longer be an issue by the 21st century. The euro would never get close to the dollar. Africa would never be land of opportunities and growth. How could Leicester ever win the Premier League? American presidents don't go to Cuba. Pop stars don't win the Nobel Prize for Literature. The Academy simply doesn't make a mistake when announcing the winner. One simply doesn't say, I will no longer be the Pope anymore. You don't become the French president unless you have a certain age and a long political career. Only those with power would be heard by the media. Only those with guns would be able to start a revolution. Forget the future.
So forget the future. We can't predict anything anymore. It's not just Trump and Brexit, but our world is now in an environment where our leaders are hungry for economic growth and jobs. It is now exponential the panic that we see around the world in that regard. And secondly, align with that, partly resulting in things like what happened in the American election, technology has made information so transparent now to everybody at the grassroots level that we have this information-rich local communities across the world. So we do have a very flat community globally when it comes to information. But most importantly, all of this change is happening faster and faster and faster. And important for us today as we look at entrepreneurship, innovation, and money, let's look a little bit about what this really means in terms of our entrepreneurs. So what this is really meaning is that when we move away from designing simple apps that help us to get our food delivered faster or some other simple consumer benefit, and we move now to these regulated industries, these big companies, which, like David and Goliath, can fall so easily. And if we look at the early adapters known by the public across the world, like Uber or Airbnb, what's really phenomenal here is how unprepared we are for these unpredictable things. Look at how the government of the city of Paris dealt with the fact that what do they do about these licenses and these regulatory changes? So there's this massive, great digital disruption going on that's going to bring for us a massive tidal wave of regulatory challenges, but it's also going to bring opportunities. And this is the really fun, exciting stuff. So, I put it here, why entrepreneurs relish uncertainty. When all of these big changes occur, you can either go, oh, MG, what am I going to do about this? It's panic. This is all lack of predictability. Or you can say, someone's just changed all the rules, and all I see is fresh opportunity. So, why am I excited about this, and why do I think as entrepreneurs we're going to be prepared for it? Well, first and foremost, you have to start with the most powerful thing about entrepreneurs, and that's the people. This generation, we sometimes call them millennials, are creative, they're global, open-minded, you're connected, you're generous. You're certainly more generous than your counterparts were in the 1980s that were starting companies. Trust me, I was doing it in those years. And at the end of the day, though, this has become something which is much more important than simple, narrow commercial value. The people that enter these global startup ecosystems we see across the world, no matter what kind of economy you come from, they're entering not necessarily to make money, but because they're curious. And they're entering, if they want to do well, that's great, but they're not going to do well at the expense of not doing good. The other thing you see, I recently gave a talk in Spain to a very large group of unemployed youth. And my predecessors to the speakers before me walked up on the stage and talked about this program and that program and how poor you, I'm very sorry about this, and society should have jobs for you, and this is not good that we're in this situation. I stood up and said, look guys, compared to when I started my first company, you have an entirely different set of cards. Number one, you now work in little villages. Look at this great startup community. Look at the communities and the communities within the community that exist within this event alone, but across your country. Secondly, you need less capital to start something up. Media is free. It doesn't matter what family you came from or what education you have, you can succeed. It used to be pedigree mattered an awful lot getting ahead in business. You can live anywhere. You don't have to be on Madison Avenue if you want to create an advertising agency. And basically, you're now dealing with consumers that are more open to dramatic change, to unpredictable things that you're going to throw at them. Whereas previously, it took a long time to convince people that just maybe you might need to change the way you've been doing things. People pick up and drop technology so quickly. And I could go on and on and on. Free online education, ever since MIT put all their courses online, it's opened up a plethora of extraordinary material available to everybody. We have no excuse now to not find information. So I say there's no excuses. And now we've got this digital disruption to go with it. So what we've done really as societies, and this is nothing new to this audience, is that we've become a lot more scientific now about our field of birthing the new, building new companies, and figuring out better ways of doing things. We now know that we have to test and experiment with a company. It's not about starting a company. It's about conducting an experiment for the purposes of the results. We know that we have to do team building, and we know that it's about who we bring on our team. What's those skill sets? Are we able to swap them out in a comfortable fashion? And we know that it's also about our networks. Networks are, of course, flourishing, but they become the primary currency of everything we need in order to be able to create the new. They not only give you access to all the information and the customer feedback, but of course, ultimately, it's networks that will give you access to money. So let's get to money. They said today was all about finance, and they said we want to make sure that you cover a fair amount on this. Well, look, first of all, let me cover in 1 minute. My colleague Paul Kudrowski does this much, much faster than I. Where do entrepreneurs get their money? All right, let's just make sure we understand that. I'm going to pay you. We have these things we call sketchbooks. We go ahead and play it right now. I'll give you a little bit of an insight about that. Oops.
Most young companies need money, which may or may not come as a big surprise, but they do. The number one source they get money from is from their own savings. Whether it's a few $100s or even thousands of dollars, that's what we tend to tap first. And a lot of companies don't get money from any other place. They get money from their own savings, and then after that, they're lucky enough to be cash flow positive. They're profitable. So we talk a lot as if all companies require all sorts of external capital, and the reality is that more than half of young companies get all their funding from a combination of founder savings and then cash flow from the business, and we're out of here. Next up on the list is another one that catches, I think, people by surprise, and that's credit cards. Almost every young company you can think of, to one degree or another, was funded on credit cards. And it is the single largest source of capital for young companies after founder savings. And then the next place where they tend to get money is from friends and family. After I've tapped out my credit card and I've used up all my savings, I turn to people I know and say, hey, will you help me? And that's the third biggest source of capital. And then the next place is banks. And the banks are a totally weird situation because with banks, they get a lot of attention, but they actually fund very, very few young companies. But it's not their fault. You have to think about the way bank lending works and how shareholders want banks to lend. They want them to lend money against secured assets. And young companies don't have any secured. They have nothing to secure it against. And the joke in the industry is you can get all the bank funding you want as a startup as long as you don't need it. And then the last piece is venture capitalists. They get the lion's share of the attention, which in some ways is warranted. You know, your Googles and Apples and FedExes and many others all have venture capital money inside of them. But the reality is, and this is from Kaufman Research, less than 20% of the fastest growing companies in the United States took any venture money. And that's not because the VCs wouldn't give it to them. It's because they didn't want it or didn't need it, because they had all those other sources. I don't need money, and I certainly don't need money on these terms. Because venture capitalists, unlike banks, they don't lend against secured assets. They give you money in exchange for shares. So they take some of your company away. So my answer is if you don't need it, definitely don't get it. There's no question the venture industry has become staid. The irony is it's intended to fund disruption, and yet it's an industry that had become complacent. And interestingly, over the last 5 or 6 years, we've seen the emergence of other mechanisms for funding, like AngelList, like these kinds of peer-to-peer funding sources, as people increasingly provide capital in smaller amounts, but more people doing it. directly. Having said all of that, though, venture capitalists are hugely important for those young companies that don't have access to bank money, but are growth companies. They have the prospect of being a $5 million or a $10 million company in a couple of years, and they need that growth capital to get there quickly. So it's a race. And the way you play the race is by getting money from people like venture capitalists who give you the money so you can compete with other people who are racing as fast as you are. If you can run a company off cash flow and some combination of credit card, your own savings, and friends and family, Bob's your uncle. Run. Keep all the equity, because there's no better thing than being in full control of your own destiny.
So he speaks even faster than I do. But he gives you a quick, to make sure we're all on the same playing field. Where are people getting their money? The other thing I wanted to try to cover a little bit today was what is happening in terms of where is the global investment going. A few things from our own work that we do with the World Startup Ecosystem Report. It's quite evident to us that 28% of global investments into early stage companies are still captured by Silicon Valley companies. So that is probably no surprise to you. And its biggest contenders are New York City and Beijing, which capture about 11% each. But if you look at recent trends, the big picture is this. The deal count, particularly in the last quarter of last year, has dropped below 2,000, which is for the first time, which is a substantial drop from previously. And that funding for the second straight quarter, we're seeing just $21 billion invested in the fourth quarter of last year. So what's interesting to me is we only saw a single deal above $1 billion and 32 rounds above $1 million. So the numbers show that actually, if we break those down a little bit and look at some charts, which is maybe a little easier to look at it, the amount of funding by VC money going into startups is still going down. Not necessarily disproportionate. So, for example, Europe has actually been taking a bigger share. There's a bigger share going for some industries like healthcare. But North America, actually, there's been a drop in American funding. Canada's seen a rise. So you might look there and say, well, how is that the case? And typically, and this is the important lesson out of all this data, is that it ends up being the outliers. It ends up being the unusual situation. So in Virginia, the United States where I live, it was one deal of $1.2 billion by SoftBank into the OneWeb deal, that might skew the entire picture. But this does give you a sense that the largest deals were indeed spread across the world. You can see there China, UAE, and the United States. But it's still held in a very small cluster of countries. So who's doing these deals? Well, look at this. You'll notice that 5 out of these 7 most active venture capital firms are, in fact, 6, I see actually, of these 7 are based in the United States. So that's going to be the essence of what I want to use the balance of my time to talk about. If we just look regionally, I'm afraid Asia dropped at the end of last year by 25% compared to the third quarter of last year. We've seen, but we did see a dramatic rise in Europe and a drop in the United States. Well, that tells us, thanks to PwC, PricewaterhouseCoopers, who keeps track of this and has done for a long time, sort of where the global money is flowing from and where it's going to. But I want to talk a little bit about what do we take away from that? Well, I was asked if I could come up with 3 or 4 recommendations that I would suggest going forward in terms of what we may be thinking of trying to do here. The first one I want to talk about is angel investing. I know some of you may be participating in Bill Morrow's doing a much more hands-on session tomorrow, but I wanted to cover a few things. So first of all, to make sure we're really clear about this, Angel investing, in my view, has still become this sort of epicenter of the strategy, the pinpoint of the strategy. In whatever you're trying to do, whether you're on the crowdfunding end, you're on the institutional venture capital end, angel investing is where a lot of the attention needs to go. We actually at GEN, the Global Entrepreneurship Network, have created something called the Global Business Angels Network, which is made up of every angel investor network we can find in the world, for the very purpose of enabling them to share knowledge, to be able to help the strong ones mentor the weaker ones, to be able to increase cross-border investment, and to do some of the things that we're talking about here in terms of policy. But let's just look at what is going on with angels. Well, you know, a couple of weeks ago, I had the opportunity to listen to Brad Feld in Boulder, Colorado, and I was looking at what he was talking about, and he was saying that, you know, when in Boulder, Colorado, he's now got a pretty robust, healthy community of 2,000 individuals in that small town who are angel investors, and has really come together. And so, from him, capital formation has become a form of community education. And so that's what we need to think about it. We don't need to think of how we're going to go out and find rich people and get them to invest in startups. We need to think of how do we create a community of these people? How do we get them to think that this is actually what, as I'd like to describe it, for-profit philanthropy? Secondly, governments around the world have started taking action and writing rules around crowdfunding, putting together in different kinds of incentives for angel investing. Now is the time to start testing those. So you'll notice, for example, in the United States, which has been a latecomer, ironically, to this field, that there are a lot of experiments that the Securities and Exchange Commission are doing in states to work out, have we written the rules right? Because it's going to be an ongoing process. And the third thing to focus on is, what kind of cash are we going to focus on? And the short answer to the question is, we're going to come back to the valley of death period here. And angel investors are becoming, the super angel communities are becoming a lot more likely to be able to fill this gap. So while we still have to focus on translating money from individuals into the first $2 million layer, and we feel that once people, as Paul mentioned on that little sketchbook, you know, once they get to the point where he says it's a race, it's really a race, we're okay, because the institutional venture capital guys have got all the incentives are aligned correctly. They're going to come in on the $50 to $100 million deals. The focus needs to be on the $20 million deals. That's what you've got to work on, because if you're not working on it, it's going to take you 4 or 5 years to build that culture and to build that capacity. And so it's something that you need to be thinking about now, regardless of whether you feel like the gap is already there. And of course, you know, beyond this being a long-term view, we have to remember that at the end of the day, money will follow ideas. It's got nothing to do with what country you're in, what community you're in. Money will follow ideas. So a few things we just want to point out, because we've done a lot of studies on angel investing, that I think is important to point out as to why this should be the centerpiece of your strategy. Just a few of these things, very particularly, you know, angels, they clearly bring a very positive, shall I say, culture into the startup community. They're doing lots of due diligence of potential investments, which is really helping you in terms of customer validation, competing products or services, management plans, sales channels, business partnerships. I listed them up there. But they're also taking a much more active role as individuals in the company than the typical venture might do, in that they're clearly serving as a mentor. And most angels, by the way, won't call themselves angels. They'll call themselves mentors. They want to find you. They're not looking for you to find them. But of course, they'll become your advisors. They'll become your friend, because they're going to give their time, not just their money. And in a recent study that Josh Lerner from Harvard did with Karen Wilson, who serves on our advisory board, you know, a few things point out as to why the numbers are starting to show us now that this is really a better strategy. 14 to 23% are more likely to survive for the next 1.5 to 3 years. You know, typically startups funded by angels are 10% to 17% more likely to have a successful exit. They're much more likely to obtain follow-on financing, vital to that $20 million gap in the valley of death. And outside the United States, it becomes particularly important because they're starting to provide this additional functionality of validation, certification, and being able to help work through much more complex patenting issues. Beyond the Josh Lerner study, it's clearly evident from other studies that mentor financing increases the number of startups, which is obviously what we want to do. We know that we've still got that very small percentage of the top that are actually going to make it, at least in terms of scaling. But we need to increase the pie if we're going to be able to increase the volume of deals. And of course, they widen the pools of startup funding across the ecosystem. All right, lots and lots of literature on this, by the way, and if you're interested in more of what we're doing, it's gban.co, where our website is, and you can look at people like John May, who's on our board of directors for GBAN. Angels Without Borders has done a lot of discussion about this, including this issue of making sure that you're focused on this valley of death component. But I do want to add a quick shout out to the policymakers. I've had the great opportunity to work with some of your staff and ministers here in Thailand who've been active in our policy communities in Gen. And one of the things that we've noticed is that government now is sitting at the table. They've taken off their suit and tie. They told me to wear suit and tie today, by the way, but typically I'll be up here in one of those awesome T-shirts, which I've asked for. I want a Startup Thailand T-shirt, which I'm going to get soon. But governments have really brought themselves to sit, look at you in the eye and say, it's not that traditional thing of how can I help, but they're getting a lot more, they're getting smarter at being one of the actors at the table, rather than the role that government traditionally has played, which is we're just the benefactor, and we're the people that control things from the top. Certainly when it comes to entrepreneurship and startup communities, we're seeing this very, very evident. And which means that they're starting to not just craft the rules, but as I already mentioned, to test them. Beyond obviously doing co-investment funds, we never recommend public funds, but public and private funds make sense. They're obviously doing tax incentives too. We're seeing this country after country where people are trying to make it very easy for the average citizen to join and do what they did in Boulder, which is have almost half of the population have some engagement in the angel community. And as you're getting from Bill Morrow tomorrow, or at least a shortened version of tomorrow, trying to do more investor training and readiness programs really becomes very, very important for policymakers to help assist with. I've got a limited amount of time. We can come back, but I do want to just mention a couple of other pieces of advice in terms of, 4 points in terms of what Thailand might look to focus on. So first of all, to attract global investors, you have to make sure you got these things in place. You've got to have a transparent shareholder structure. This is vital. Foreign investors are not going to come in here unless also they can get a return, but also they can get their money out of the country. And in a lot of countries, that's the single most important reason why individual investors are not walking in. And they want to know that you've got to make sure that your entrepreneurs who know how to be third-party investment-ready partners of angel investors. This is one of the reasons that we're conducting various boot camps and programs to help entrepreneurs be better partners of investors. And then you want to make sure that you've got an open cross-border market that welcomes entrepreneurs and investors from other countries and encourages Thai entrepreneurs and investors to be active not only in Thailand, but also in other markets. This is obviously a strategy that Singapore deployed. Obviously, they were motivated by the fact they had obviously such a small country, they couldn't afford but to operate outside of Singapore. It's always they call this the value proposition of being a small economy. The second thing is, and I think you can get this, I guess this event is a testament to this, but angel investors want to see that there's recognition from the top. Great story about how a barrage capital came about in Jordan. They had this success story, Maktoub, which spurred a revolution in entrepreneurship and investment. And when after the king of Jordan had invited the entrepreneur to the palace, it led to a sort of chain reaction. And then all these investors got together. Then they got really smart people in. In fact, they took the pick of the crop from around the world and created the barrage capital, which has been one of the most successful firms, certainly in the Gulf region. And then obviously this is a favorite of mine because obviously in my career working in entrepreneurship, both as an economist, but most importantly as someone who's had 2 startups and 2 exits, it's very important, I'm now focused on networks, to really understand that you've got to pick a couple of networks. I mean, obviously, we run a network, and part of the reason that I flew in for the day today is to support Steve Chia and all of the relationships we are working here to build Gen Thailand, which we hope will bring the best of what we can find from all the countries around the world. We operate in 170 countries to bring the best, but more importantly, the most relevant things for what you need at this point in the maturing of your ecosystem. But I will tell you that networks are going to be critical because you have to think and operate not like you're in a country, but think and operate like you are globally. And this means that, there are going to be other networks. For example, Endeavor's great on the scaling part of the networks, and I can certainly recommend other networks. But I certainly think that the networking thing is going to be important. But related to this is this last point, which is you have to figure out how you're going to engage in non-Thai companies, both as investors and as entrepreneurs. Because when you get inside the DNA and you understand what's going on in these other communities that are operating in fields and markets and industries and verticals that you care about, that's where you're going to end up really walking away with the right connections and right knowledge to be able to build what you want in Thailand. And it's got to be country agnostic. It's got to be done in a way whereby I just want to be surrounding myself by the best people I can find. And if you're doing that, then you're starting to make yourself attractive and by definition, your country attractive by being a cluster of people that say, hey, I want to go work with those guys in Bangkok. So certainly I think both on the investor side, I think the investors want to see that the entrepreneurs indeed are, oblivious of that. So my other 3 quick bits of advice, I was asked to give 4 pieces of advice, not that, at least sharing knowledge from what other communities are learning. This I'll do really quickly, but look, this is really simple. We've seen an explosion of competitions, accelerators, support programs for the entrepreneurial support community. Government's jumped in, the money's flowing, everything's going on. But look, we're seeing a flatlining or a declining rate of new firm formation. So there's something wrong with what people like me are doing to help entrepreneurs. And so we need to do a much better job at being able to measure what we're doing. I put examples of some of the myths that at the Coffin Foundation that some of our myth builders have been able to break as a result of looking at the data. We've got to collect better programmatic research on what it is we're doing, what were the outcomes, and how did it work. Here's some of my favorites. That it's, the average age of a US-born entrepreneur, every time I ask that question, I've given you the answer here. Everyone tells me it's like 22 and they're in a garage or whatever it is. No, it's 39 years old. It's this constant thing that small business is, the engine of our economy. No, it's not. It's the age of the firm, which is a much more important variable in terms of economic growth and especially job creation than the size of a firm. I could go on, but we have to look at the data. So whatever you do here in Thailand, you have to make sure that both your policy and your programs are adequately informed by robust data. The data has been ignored in our field. Our field has basically been a grassroots movement that is essentially built up from the bottom up, things like Startup Weekend and all these things. No one sat down and created those things and put measurement structures in place. But we have to do a much better job at measuring what we're going to do, especially now we've done 10 times the amount of intervention that we've now got. And as a result of this, you're seeing tons of really interesting policy work going on as we get a lot more data so that we can now figure out what it is we really need to be doing. So in the United States, for example, it was around how do we get better rules for crowdfunding. It was around coming up with a startup visa. I mean, these were issues that, frankly, we figured out purely through data. We looked at the data, and these, we were told, ended up being the barriers that we needed to do. So we do Global Entrepreneurship Week every November. How many of you have ever heard of Global Entrepreneurship Week? Any hands? Well, fair number. It's basically 40,000 events, 1 week, held in 170 odd countries. But the idea is to bring the rest of the public into the evangelical world we all live in around entrepreneurship, because we need more people participating in the process. And so what we do is literally a huge, great celebration and festival. It's been wonderful, especially at bringing economies that have found it hard to step into the world of the entrepreneurial culture. And the other thing is what we're doing on our ecosystems. And there's so much, there's another whole talk, but let me just tell you one thing to remember about this, is that none of the stuff we do matters unless we understand that we're operating in an ecosystem. And by that, what I really need to, I definitely wanted to call this a renewed human spirit at creating value, because that's what we're really doing with all of these efforts to birth the new, is that we're creating ways to take what we have at our disposal and be able to create much more value, but better value. And so we have to understand that funding startups and doing the right things from the external parties to help startups isn't going to work unless we understand that at the end of the day, it is very much an interconnected ecosystem, just like it is in the environment. It grows organically. It's a long-term deal. Everybody gains and everybody suffers when things don't go right. All boats rise on an incoming tide, as they say. And that, ultimately there is no recipe for being able to do it. You've got to come up with your own Thai recipe for how this ecosystem is going to flourish here. And you got people like me who don't live here, who come in and give you some sharing of knowledge of what we see and observe in other parts of the world, what we see and observe from some of the other data. And you've got to pick out what is relevant for what's breathing here. How do we make our ecosystem breathe stronger and in a lot healthier way to enable more people in our society to figure out better ways of doing things? So I did want to mention in that capacity, one of the most fascinating things is from our global startup ecosystem report we did with Startup Genome did with Jen, is this notion of connectedness. And this is something we're going to work with your ministry on and making sure that Bangkok is never excluded again on this, because this is really the most important component of the ecosystem, is that ultimately you are part of, and by the way, we do something called the Global Entrepreneurship Index, 137 countries who measure the performance of their national ecosystem, and you are about 65 out of 137 countries, okay? So looking okay, but we want you in this top 50. We want you in this top 30. And to get in it, you don't sit there and go through the traditional long-term visions that you've traditionally done. You've got to think about, how am I going to be part of this global ecosystem? So at Gen, our tagline is one global entrepreneurial ecosystem, because we've recognized that all these pieces actually grow exponentially faster as individual startup ecosystems if they're all connected to each other. And you understand, we've got an extensive report. You can look it up, Startup Genome, just Google Startup Genome and the Global Startup Ecosystem Report. And you'll look in there and you'll see, detailed reviews of exactly what these connections are, why they matter, whether it's on finance or whether it's on other elements, in terms of how you're really going to rapidly accelerate the scale that you improve the environment you've got working here in Thailand. It's not just going to be because of guys like me that walk in and say, oh, you got to do this for your angels, or you've got to do this when it comes to knowledge about that. It's going to be because you're going to learn together with the other players in the global ecosystem. All right, so at Gen, we're doing a lot. If you want to stay involved in what we're doing, you can join the global community today. It's always, everything we do is free. We're a nonprofit. But we have everything from huge live events. We'll be holding a GEC Plus here in Bangkok at the end of September. We do Global Entrepreneurship Week, which I mentioned. I want to do a quick shout out for one thing we're going to roll out here called Startup Huddle. I call it Alcoholics Anonymous for entrepreneurs. So how many of you are actually startups in the room? Oh no, you're too shy to put up your hands? All right, we haven't got enough startups. All right, so so this is the target to the rest of you. So what we do as Startup Huddle is a startup shows up and the rest of the community comes together. Sometimes this is great. In Africa, this is done sort of under a tree. And basically the startup says, here's all the things that are going right. Here are the things I don't understand. Here's all my problems. It's therapy for startups, okay? And the entire community sits around, drinks coffee, and talks about that one entrepreneur. How are we going to connect them to the right people? How are we going to tell them they should pivot their idea, et cetera, et cetera, et cetera? It's something we want to get going in Thailand. We don't have any local community organizers. So if you want to make yourself a lot more of a central node of a community and you want to have something to do it, this is the way to do it. And it's what I call help one entrepreneur at a time. Everybody that I know who's ever done this says great, because every time I do one of these things, no matter what else awful happened in the day, I know that at least I did one good thing for someone else that day. I helped one entrepreneur at a time. And I got to see everybody in the community while I was at it. So we have lots of these programs. We have lots of competitions that you can enter. Of course, we, as I've indicated, have a great deal of faith and confidence in the importance of building robust academic peer-reviewed research in our field. We've too often had this as being something that sort of had adjunct professors giving us attention. And now I think we're seeing increasingly a lot more of the most serious scholars in our world give attention to understanding this correlation between entrepreneurial dynamism, economic growth, innovation, and most importantly, improving the fabric of our societies. So we're very proud to be part of that at GEN. I hope as we get closer to rolling out GEN Thailand here, you can let Steve Chia know if you want to be part of it. We look forward to connecting any and all of you to any of those components outside of Thailand, if that's of interest to you, or we look forward to coming back and bringing to you either programs or knowledge or networks that you might find useful to pursuing your endeavors. So I want to say thank you for having me. It's been a pleasure to be here. I know the funnest part is outside the room listening to the pitches. So I won't keep you any longer, and I'll say it's been great being here. Thank you.
All right. Thank you so much, Mr. Jonathan Ortmans, President of Global Entrepreneurship Network, or GEN US.